Well, SoFi just had earnings and the stock absolutely tanked. And even today, as of this recording, the stock is down once again, and who knows where the bottom is. But guys, I gotta be honest, that wasn't even the most concerning thing about SoFi, about SoFi's earnings and kind of everything going on with SoFi here. So what I wanna do here is I want to break down what Wall Street's saying about SoFi, what's actually going on with SoFi, of course, what we're discussing in regards to SoFi, and get you guys some truth and cut through a lot of the noise, both the bull and the bear, because it has just gotten ridiculous out there. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. Now, guys, I'm a lot calmer today than I was yesterday after the earnings calls, after going through the reactions and everything else that was kind of going on around SoFi. I have a private video there for my group members. So of course, group members, go watch it there in regards to that, where I basically just, the truth came out there. And again, it's not for public consumption there. It's not something I would ever put up publicly there. But my thoughts on a lot of things around SoFi are in that video there. So if you're a group member, make sure you check it out. Of course, we do have an earnings flash sale going on right now for earnings season, where you get videos like that. Of course, we're going to watch Tesla's earnings tomorrow live in person. We'll do Palantir's earnings too. And of course, you guys know you get free courses, free coaching, all kinds of other things are involved there in the group. So make sure you check out the pinned comment, see if a membership's right for you before the earnings flash sale ends. But let's get into the videos here. I'm actually going to do two today. So a little twofer here. We're going to kind of give you what Wall Street's saying. Then we'll jump over to what's actually going on with SoFi. And then, of course, I'll wrap it up there and give you guys some thoughts, some much more cleaner thoughts about SoFi and what's going on with SoFi stock moving forward in regards to these earnings and everything else.
How about SoFi, Diane, getting slammed down 10%?
Yeah. SoFi is getting a hit today and is dragging down some of its peers with it over in the fintech sector, because you are also seeing, SoFi having the biggest knock-on effect down off the lows. They were down as much as about 12%. So right now down 10% off the back of their latest quarterly numbers. But it wasn't so much about the fourth quarter, because they did beat expectations there. Adjusted EPS 5 cents a share. Doesn't look bad. That's a beat. Revenue $739.1 million, also a beat. What's wrong? The forecast. That's what's wrong in terms of the street's view on this. And in a day when it's sell everything kind of day, you can't miss metrics. So
all right. So right there, obviously in regards to the earnings, the exact thing that we said couldn't happen happened. And that right there is why the stock went down overall. Of course, there was a lot of the other DeepSeek stuff. I'm not going to get into all that mess here. A lot of silliness going on around that. But in regards to the earnings, it was an incredible fourth quarter. I couldn't find anything in the numbers that I didn't like for the fourth quarter. Every single tangible metric that you could look at was great. That right there wasn't the problem. Of course, the problem was the guidance wasn't up to Wall Street's expectations, just like she said there. And unfortunately, even if it was a great green day out there in the market, you were going to get beat down because you ran up, 80 something percent from last earnings into this earnings. I think it was up 120, 130, whatever the heck the number was, into this earnings call here. Basically from October until now. So when you have that sort of run up into the stock, especially when the stock is obviously trading really rich now, you got to have everything line up. And we just didn't have that. Now, that doesn't mean I'm concerned or anything else like that, worried about that. But you kind of see where Wall Street, gives it a reason to dump it. And they obviously dumped the stock. And it's continuing on today as well in regards to the market. Obviously, a lot of the other players that got beat up with the whole, AI, whatever, yesterday, or have bounced back today. So, it kind of tells you there was more going on there than just simply what a lot of folks were out there saying, and I'm going to keep calm here, that, it was just because of this. If it wasn't because of that whole, DeepSeek, whatever garbage, it would have been up and it would have mooned or whatever, just silly talk like that. We're going to get away from that. We're going to stick with the truth without the hype here. And she was actually more spot on than a lot of those other folks were.
For the first quarter, they're projecting EPS of 3 cents a share. The street was looking for more than that. They were looking for what they made this quarter, 5 cents a share. For fiscal year 2025, they're projecting EPS between 25 and 27 cents. Again, the street was looking for more than that. Now, revenue, it is a mixed picture, I should say, because the revenue projections are better than what the street is looking for. But again, what this EPS number is, the projection for that is not what the street wants to see. So you're seeing that stock get dinged really hard, especially, in the context of the CEO calling 2024 their best year ever. Wall Street does not care today.
All right. Big sell-off, but not alone this morning, of course.
No.
So at least there is, they're in good company right now.
Yeah. Yeah, Block taking a hit as well. PayPal also taking a hit off the back of this. So you see sympathy moves, whether we're, talking about the telecoms, those were on the plus side, and over in the fintech, you're seeing sympathy moves as well.
All right.
Also keep in mind, yes, that's partly true. Part of the reason why telecoms were up, there was also a lot of tech that was up as well. It was a flight to safety. And of course, telecoms are, more safety style stocks than they are high growth stocks at this particular point in time. When you're talking about AT&T, Verizon, stuff like that, that's not in the same league as SoFi, PayPal, XYZ, which was Block, which was Square. I don't know what the heck's going on there. Anyways, it was just a flight to safety today or yesterday in regards to the stock market and what all was going on because of all the hoopla.
XYZ, the new block ticker. All right.
Yeah.
Okay. At least we finally got something that fits the name. I don't know how it does, but it still helps me stop saying Square. Thanks, Diane.
Yes. All right, you got it.
All right, there you go. I don't know. I don't get the move either. Whole different topic, whole different video. So that right there was kind of Wall Street's take on it. Pretty standard for those folks. There wasn't a whole lot in there that was, and I guess because of all the other noise and all the other news out there, they didn't need to create any other narratives, which is what Wall Street does. You got to keep that in mind. That's why I'm always telling you guys, ignore the noise. You have to ignore the noise with this sort of stuff, both positive and negative. Both of them can be damaging to your investing, but right now they had a lot of other narratives to go off of. And so I suspect here in a week or two, once all this stuff all settles down, we'll probably start hearing more coming out, depending upon which direction they want to take the trade, right? That's a lot of where these narratives come from, a lot of where the upgrades and downgrades come from. It's not from what's actually going on with the stock, what the actual valuation is. Nothing to do with that. It has to do with where they want to take the trade next. Now, whether everybody cooperates or not, it's a whole different story. But that right there is the reality of what's going on with there. So now that we kind of have the Wall Street side out of the way, excuse me, if I could talk, let's jump into what Noto's actually saying and his interview that he gave shortly after that. And I'll kind of give you guys some thoughts on what I'm thinking, what he's messaging, more importantly, and where the bears have it wrong and where the bulls have it wrong as well. And it is critical for you to understand this, or else you're going to end up making a big mistake with SoFi stock. So let's jump into that video next here, and then I'll give you guys my thoughts.
Joining us this morning, at first on CNBC Interview, SoFi's CEO, Anthony Noto. Anthony, great to have you. I guess the tape is a little squirrely today. I wonder what you make of the reaction.
Thanks for having me, Carl. We had a record-breaking quarter in the fourth quarter of 24 and a record-breaking year. Record revenue up 25% year over year for the year and the quarter. Over 30% product growth and member growth, also really strong margins and returns. So we continue to focus on durable growth, ensuring that we continue to drive strong returns. And we're doing that through brand building and innovation. The business is the best it's been, and I think the best is yet to come in 2025. We actually not only beat revenue and earnings in the quarter, but we raised 2025 revenue above consensus by about 10%. I think the thing that the market's reacting to is our EPS is slightly below where the street was. And that's primarily because we want to make sure we're investing in the business for the long term and not just driving profitability in the near term. So we're committed to 30% incremental EBITDA margins, which is where we were in 23. 24 was a conservative year in which we drove to GAAP profitability for the first full year. And now we're tilting back more towards investment so that we can grow the top line for this foreseeable future over 20%. We actually took our guidance of the CAGR from 23 to 26 and revenue up relative to before based on that incremental spending. So feel great about the business, a bunch of huge milestones in the year, and we're really happy with the outlook that we have.
All right, so he basically broke down everything for us in regards to SoFi stock. And it actually kind of mirrors what they said last year as well. So if you haven't noticed, and if you really, really pay attention to what he says, not what YouTubers say, not what Wall Street says, not what Kramer says, not anybody else like that. So I tell you guys to ignore the noise. If you focus on what he says, this is following the exact blueprint, the exact plan that they've had for a long time now. They're basically building the business, essentially still doing the beat and raise strategy, but basically signaling to Wall Street, hey, our targets are there, but we are going to continue to focus on building the business long term. And oh, by the way, we're going to show you because we're going to take money now and use it to put it into products so that way we can bring profits later and more profits later, more importantly. But in the meantime, we're going to give you guys a little bit of a carrot here. You're going to see revenue growth because of those prior investments that we made starting to finally kick in and starting to pay dividends there. And we're going to take those new profits that we could use to show even higher profitability. There's no doubt in my mind, if they wanted to take a different strategy next year, or I guess this year, since it's 2025, they could do that and show a higher number. But again, that's giving you short-term profits at the expense of long-term profits. And that's not what you want as a long-term buy and hold investor. Now, as a trader, that kills you. That hurts you because you don't have quote unquote catalyst to continue to push the stock up, push the stock up, push the stock up, because Wall Street, that's what they're all about. They want to push it up, then they want to take profits. That's what they want. I don't want that. I don't want a situation where my stock trades flat or stagnant for a period of years because traders have a reason to trade it up. And then the moment you can't meet these ridiculously high expectations that are impossible to beat over the long run, or impossible to keep up with over the long run, you end up with a period of years where your stock goes absolutely nowhere. A lot of you guys own a lot of stocks that are still in that situation from 2021, right? Where it still hasn't gotten back up to those levels yet. SoFi is another one. Hasn't gotten back up to that 2021 level yet. And then who wants to be in that situation again with SoFi? But yet there's a lot of folks out there in the SoFi community, not all, mind you, there's some great folks out there, but there's some that apparently want to see that. So that's why I pay attention to what Noto says, how he's going to execute the business. And more importantly, I understand two things. One, how Wall Street's going to react to that, which is to be expected, right? They're going to trade it down because he's not going to give them infinite profits just for the sake of giving them infinite profits. He just said that. Therefore, they're going to be like, well, he's not going to do anything for me over the next 6 months, so screw the stock. That's the way they work because they're looking at their bonus coming up here, their quarterly bonus. Well, guess what? He's telling you, I'm not going to give you a good number next quarter. I'm not going to give you that high number that you want. And so therefore, they're like, oh, well, screw it, trade it, move on. That's how Wall Street works. So that's kind of piece one. The second piece is I understand valuation. And even if he were to continue to push profits higher and higher and higher, it still is incredibly hard to justify a price significantly higher where we're at right now based upon valuation. It's just not. I understand that's not what everybody thinks. And I also understand that we really have a hard time in regards to SoFi's, what is the actual multiple that Wall Street's going to give them in the end. Understand that's still up for debate, but we'll talk about this a little bit later here in regards to that particular point in regards to the multiple, because there's some that are just kind of, we'll just say, I'm not sure I don't know what world they're looking at or if they're even looking at valuation at all. But let's jump in here and see what else he says.
We mentioned these originations. Do you think that points to a new chapter in the loan cycle?
There's definitely a more favorable backdrop for lending. We purposely took an approach in 2024 that was conservative and diversified the business. By the end of the year, our technology platform revenue and financial services revenue now accounts for 47% of our total revenue. So we're not a lender anymore. We're much more diversified, and we're also moving.
So let me translate that for everyone out there. He's telling Wall Street and trying to paint the narrative that we are not a bank. Do not give us a bank multiple. We are closer to that fintech. We are more than a lender. As a matter of fact, we're a lot more than a lender. And we talked about that earlier this year where I said, because Noto told us, not something Luke created or Luke knew or Luke had inside information. Totally not true. Noto told us, hey, we're slowing down lending on purpose. The only reason why you're slowing down lending is so that way your financial services and your tech platform can catch up. So that way you don't end up with this outsized where 70% of your revenue is lending and only 30%. You want to get that closer to that 50-50 or actually get the, lending down to 40. If you can maximize lending and it's only 40% because the tech platform and the other financial services and everything else are going so well, you're even more apt to get an even higher multiple, which long-term, which of course is what he's looking at, means you're going to get a higher stock price. Short term, it may not do as much, but again, he is playing the long game and he is signaling to Wall Street over and over and over again that we are more than a lender. And more importantly, he's pulling back the business in certain areas to show, hey, we are more than a lender. So again, he is giving us the answers to the test. If you're paying attention, if you're listening, if you're not trying to draw crazy, conclusions out, 4 years based upon this and that, he's telling us exactly what he's doing, exactly what he's executing to, which is one of the reasons why I really enjoy having him as a CEO, because he's not out there playing games. He is simply telling and then executing to it to a T. Matter of fact, executing better than what he said he's going to execute to. So very, very happy all the way around with this. And again, he's giving us the answers to the test.
The revenue that we're generating to fee-based revenue. In the quarter, we had a record amount of fee-based revenue, up 63% year over year. That will be the growth driver going forward. It was 40% of revenue in the fourth quarter, and we expect it to be the significant majority in the future. So moving away from higher risk, capital-intensive lending to fee-based revenue.
Anthony, Leslie Picker here.
And that right there is telling you long term, we're going to make a lot of money, and it's going to take us a lot less money to make that money, meaning margins are going to be higher. So we're going to make a lot of money on much higher margin products than we were before. And that's huge for the business. And again, giving us a better fintech type multiple versus more of a bank multiple.
Good to see you. Within the tech segment, can you shed any light or share any color on what your pipeline looks like with regard to getting more big banks signing up?
Sure. Nice to see you, Leslie. On the tech platform revenue, the business is doing well. We would like to see it grow faster. 2026 will be a year of accelerating growth for revenue based on some deals that we announced today. We announced 3 deals. It's much more broad-based revenue stream, one of which is with the government for direct express benefits that will be integrated in 2026. And we also announced a large financial retail company that will be integrated in 2026. And when it is integrated, will be one of our top 10 revenue producers for the tech platform. And then we announced a deal with a national hotel chain to launch a white label debit card and checking and savings account. The pipeline of demand is very strong. The big financial institutions need to upgrade their technology. They're taking much longer to make those decisions than we anticipated, but we're still fielding many RFPs as well as performing proof of concepts as it relates to the financial institutions. But we don't have to wait around for them to make decisions, as there's other areas for us to drive growth, big consumer brands, B2B, as well as government services.
All right. So great interview there from Noto. And let me give you guys a few thoughts there on that last piece in regards to the tech platform, a lot of other things of that nature. Again, he's telling you not much is coming in 2025. The big year is going to be 2026. And by the way, when he's talking about RFP stuff like that, request for proposal, that means there's a lot of folks who are just way behind, and it's probably going to take more than a year to not only get those requests for proposals, get everything set up, funded, everything else. So that to me, whenever he says things like that, and he's talking, he gave you definitive timelines on the 2026 stuff. That stuff is all 2027, 2028, and later type contracts that are coming through. And even the contracts that are coming through in 2026, I doubt we see the full fruition of all that until later in 2027. Now, am I okay with that? Of course. They're there. They'll start giving us money in 2026, and that moves us nicely into 2027 and a lot of accelerated growth and a lot of those things starting to really churn and really, really produce a lot of income. However, everybody seems to think that it's going to 75 this year, and then it'll be at like 200 by 2026 or 300, or I've just seen some crazy things, and we got to stay away from that sort of stuff. Listen to what Noto is telling us. He is telling us, hey, 2025 is kind of one of those years where you kind of like gear up the business for a very good 2026, but really that 2027, 2028 timeline is going to be a lot better. You notice they didn't change their guidance. They did not raise their guidance for 2026. It didn't happen. So I haven't done a new valuation on SoFi yet because we just got that. But I can tell you right now, I don't know why it would move a whole heck of a lot based upon that number, because that future guidance, it's the same profit that we were looking at last year whenever they gave the guidance for 2026. So nothing's really changed there in regards to valuation. So why all of a sudden there's these huge, massive price targets out there from certain folks? I don't know. I couldn't tell you. That's not for me to figure out. I just know I'm looking at valuation, and okay, you got tech multiples on one side, you have bank multiples on the other, split the difference there. And no matter where you place that, the valuation is nowhere near $300, $200, whatever the case is in a couple of years. It's just not. And I'm using the data that Noto is giving us. That's why I say ignore the noise, both the bull and the bear, so that way you don't get caught like folks did with, Tesla at 400 in 2021, or even SoFi whenever it was, back in 2021, whenever it ran up to $24 a share, whatever the heck it was, something utterly ridiculous based upon what? I don't know. I don't want you guys getting caught in that sort of mentality right now, especially after a great run on the stock. Based upon valuation, we're trading a little bit rich right now, but we're very, very early in that journey. But let's say that all those bulls were right and we end up with a really, really nice run here. over the next 6 months or so, okay, guess what? That means we're now into overvalued territory for 2026. And that right there becomes a problem. And I'm only basing this based upon what Noto said. And even if I give it a full fintech multiple, I can't get to any of the prices that these folks are talking about. And they gave us the growth rates and everything else. Even if I gave it a 50% growth rate, 80% growth rate per year, I still can't get to some of these valuations, even using a full fintech multiple. So that's why valuation is so important. That's why you have to learn it. I understand my group's not right for everyone. Totally understand that. Google it, put it right here in YouTube. Learn the skill of valuation, because it will keep you from buying a lot of the narratives out there and a lot of the other stuff, both the bull and the bear, because a lot of the bear cases make no sense, right? Meta at a PE of 8 makes no sense on any world, on any earth, but yet that's what we got. And of course, there were lots of folks out there, YouTubers, CNBC, Wall Streeters, everybody saying it's going lower. It's going to get worse. It's a dead business. Made absolutely no sense based upon valuation, based upon the numbers, based upon everything that was in earnings, based upon what Zuck was saying on earnings calls. I mean, there was just a myriad of clues out there. It's not what it was. So I love what Noto said. I love what they're doing there. I was really, really happy with the earnings. I was not surprised by anything in the earnings or by Wall Street's reaction or anything else of that nature, but you got to learn that valuation piece. And if you don't know how and you want a complete step-by-step process for doing it, make sure you take advantage of the earnings flash sale down below, where we have 5 courses on that. You get your free coaching on that if you want to discuss that. Obviously, we have past lessons as well. You can go through, you can jump on our Q&As with me anytime. You want to listen to earnings calls in real time with me. You want to get that controversial video, it's in there too. So much, guys. Make sure you check out the pinned comment and see if a membership's right before the earnings sale ends. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.